Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, April 19th. Good to be with you guys here this morning. Kelly, Kazaa, Pete, Trevor, Vlad, great to see everyone in the room. So, on the docket for today, obviously the DXY, first things first, Euro dollar, dollar CAD, Sterling Kiwi, Kiwi dollar, and Kiwi CAD, all from last night's update. Special interest in dollar CAD, as you were talking about earlier, Kelly, with that message you sent me. Kiwi CAD also looking very interesting to me at this point as well. We'll take a look at Aussie dollar, Sterling Aus, and Sterling from the previous update. And then as far as the commodities go, I mean, we'll take a look at silver, which is something we were asked about here in the webinar yesterday. We went over that. I'm not really a big fan of crude. We'll take a look at where prices are. Do keep in mind at 10:30 today, we do get crude inventories out of the U.S. We are expecting a drawdown, but certainly a much smaller drawdown than previously seen last week. So keep that in mind at 10:30. So Vlad, I got you on that. CL sugar, I haven't looked at sugar in quite some time, and Euro yen for Vlad. Gotcha. Okay, any other trade setups or pairs you want to discuss, guys? As always, feel free to throw them on the message board and we will jump right in. So, first things first, quick look at relative performance for the US dollar. You're seeing a nice little kickback here today. Dollar taking back some of the losses that we saw earlier in the week. Obviously, the index coming into an area of support. Here's the DXY. The January high day close, 99.53. We talked about that yesterday. There's some near-term slope there as well. I'll show you the intraday charts. But not surprised to see a little bit of a pop back higher here. The focus still remains, the immediate focus still remains lower below 100 spot 10. Okay, the 50% retracement, former swing lows, 2015 high day close, and the median line. So as long as we stay below here, we'll continue to favor the downside. Inevitably, might see some chop, maybe a rebound even a little bit higher to the U.S. trade session, but inevitably looking for a drop down to 99. Huge region of support. Again, we've talked about this for some time. I don't want to beat it up, but you got basic trendline support off the lows, the 200-day moving average, slope support, all converging right there, just above the 99 handle. Economic data is pretty quiet for the day. Like I said, you do get crude inventories in a little bit at 10 o'clock, but the biggest player is going to be the Fed Beige Book at 2 o'clock. This is the updated assessment on the Fed's 12 districts. Again, in light of the commentary we've already seen, I don't really think this is going to be a major market mover. Said that we have seen a slowdown in the CPI numbers from Friday. If you remember, we went over that on Monday. But those aren't going to be reflected in these minutes, okay, or in this Beige Book per se. So certainly we'll be looking to see what the commentary release is at 2 o'clock. Keep in mind, again, we do have the CPI numbers out of New Zealand later tonight, and those are expected to come in stronger than previously printed at 0.4%. Quarter on quarter, the year-on-year print is supposed to be at 2. That's the one we'll be paying attention to for Kiwi. Obviously, we'll be looking at the Kiwi dollar later in the session here today as well. All right, so for the dollar index, here's what it looked like earlier in the week, just to take a quick peek. Again, this was the near-term slope that we were looking at. Bearish invalidation was 100, spot 95, 101. As long as we stayed below that, we were looking lower, targeting 99. There's 99.43, 99.53, where we're sitting now, and there's that key support right into the 90 handle. So we've broken down. We're now testing this region of support. At this point, you can bring down your bearish invalidation level from 100 spot 99 into the 101 handle. That's what would shift us bullish, but the immediate bias still stays bearish below this region. This is the monthly open, the weekly open, the median line here that's been catching this, the 50 line at that level. As long as you stay below that, I'd still favor the downside. Immediate resistance, 99.80. Former slope, support, support, break, acceleration, support, should be decent resistance, lines up with the 618 retracement of the advance. All right, so two levels of interest for possible exhaustion, possible entry on the short side, bearish invalidation. This what would put us bullish. Okay, These are the scenarios we're playing with. Obviously, looking for short entries off this region, a break of the lows. The target is really that 99 handle. Pretty big. Keep in mind you also have that 1111 gap that was uncovered until, what was this, early this month? This was late March. And then we covered that, rebounded really strongly off it. That now coincides with basic slope support. So really clean on the levels. The thing we're trying to gauge here is, do we get that pop higher into 100 first, or does it kind of hold near 9980 and then start to break down again? The reversal, or obviously the breakdown here, is pretty nice. The initial move is nice, but momentum is starting to recover. So looking for exhaustion, looking to fade strength near 100 in the dollar index. Any questions on the index? Starting to become much cleaner, right? So the levels from earlier in the week, unchanged. Just bring down that bearish invalidation from 101 to the monthly/weekly open. And again, that comes in right around 100 spot 50. Questions? Going once, going twice. Where's my pen? There it is. Number 1, DXY. Number 2, euro dollar from last night. Here's what it looks like. So obviously the explosion that you saw post the webinar, we were talking about the sterling, and that was coming into a big area of resistance. I put a piece out yesterday on daily FX on euro dollar approaching initial target resistance. I was hoping to get a pullback to get long. It exploded through that, took out all the top side targets. So at this point, here's what the euro looks like. The 50% retracement is still the focus region at 107.37. Support is still 107. So we're trading in this range right here. This was the region of resistance. We plowed right through it. You want to look for that to be support, looking for a tag of 107.70 as an initial target. The key 618 retracement from the decline off the March highs. And above that's 108.20. It's a little bit of a stretch, but it's a big confluence region. I do like that level as well. So here's what the euro looks like. Or here's what it looked like on the daily yesterday. This is why this region was so important. You had some former swing highs. You had that median line off the low. That's actually the 618 line. The breach basically puts into focus 107.70. And like I said, 108.20 would be a really, really nice spot. Here's the 240-minute look like. Even within the confines of this ascending channel, remember, ascending slopes that break to the upside typically are going to be the sharpest part of the rally. Descending slopes that break to the downside typically will be the sharpest part of the sell-off. So certainly we broke to the upside. Here's what euro looks like right now. Broke through, checking it as support. I don't know if we get into 107 anymore, but I still would like to see a dip into that region, and still I think would be an area of interest for possible entry. Swing trades have an entry at 106.90, so keep that in mind as well. If you get a drill down even lower, Jamie likes an entry from that level. But this pocket region right here is sort of what we're looking at to see if we can't get that last boost higher. So, keep in mind this is, again, an objective break of the monthly opening range, of the weekly initial opening range. There's that descending slope right there in light blue. Resistance, resistance, break, support, support, resistance, resistance. That coincides with the weekly open. So, near term, as long as we stay above that weekly, monthly open right here, the monthly open, 105.60, still going to favor the long side here in euro. Or 106.60, not 105.60. This right here, let me move this for you. There you go. Questions on euro dollar. Here's what the 120 looks like. If anything, from a trading standpoint, I'd be looking for a U.S. trade session to see one more dip into this region, get the dollar index to get that one last stretch high, and then start to look for some exhaustion in that 106.90, 107 pocket. See if you can't get some long triggers. 107.37 near-term resistance. A break, again, 107.77 is going to be at key 618. Number 2, euro dollar. Any questions? This is going to become much more treacherous, obviously, as you head towards the weekend. The French elections do have a larger impact, guys. You know, forget the fundamental story. The whole long and short of it is what the precedent sets. If you see that France is going to go the side of the populist movement, then you start to think, well, what does that mean for broader eurozone countries and the periphery nations? Is that going to set a precedent? It's basically going to be the onset of the decline of the unwinding of the euro project, is the whole premise of why this is important. So keep your eyes on the elections. If you're holding euro exposure into the weekend, might want to lighten the load if you're not already in the money, or get protective stops a little bit closer. But certainly the first round of election tallies will be pretty critical to see if Le Pen actually has a chance of getting this swing through here. So keep that event risk on tap. Okay, dollar CAD. Here's what the loonie looks like. As a disclaimer, again, I just entered another short on dollar CAD earlier before the webinar. It came right into the yearly open and stopped and reversed course. Here's the yearly open right here, guys. I guess I should mark it up for you. Boom. Okay. So yearly open. Okay, this is your 2017 open. So, and you have a former slope support. Now this slope, it's debatable. It's pretty ugly. We've gotten some, we used it for months and months and months, but long and short of it, it converges right there. And that's also the high close from earlier in this month. So for me, it's worth a stop against the high. It's only about a 13 pip stop or so, or I think even less, and we'll see if it comes back. But long and short of it is looking for some exhaustion here in dollar CAD. Here's what we looked like yesterday. And this was kind of the premise of why I wanted to look for resistance. This was the initial area of resistance I was looking for, and that was 134.15. Let me shift the focus to this. Basic channel resistance, okay? It's a 2-point touch, so it's not a major trendline resistance that I'm really going to focus on, but it's also the 618 retracement of the range from the entire decline off the March highs. So it was worth looking for exhaustion. Now, I'm breaking all the rules here, guys, because momentum is in overbought territory. That's not when you want to try to fade something. It's typically, like I say, it's the move sub 70 that's actually the trigger. But on this one, just because of where we are in price, it was something I was willing to take a shot at. So here's what the 30-minute looks like. You started to get the onset of ongoing divergence here with the momentum indicator starting to put another high in or a lower high in as the oscillator makes another high. So you're getting the onset of some sort of exhaustion. Again, I'll be really nimble on this. Positioning is very light. Initial targets just into the 34 handle, and then we'll see if we can't get the break. But looking for some possible near-term exhaustion. Now, with what we just covered in the dollar index, if you get one push higher, other areas of interest for exhaustion, 134.48, if we get up there. Actually, I think I moved my stop against that, didn't I? Yeah, I got a couple of different positions up, but it's right above that, which is the 1618 extension off the low. Okay, this is just added this morning. And then 68 would be just above the highs from the month and would be a 786. Both areas of interest for an exhaustion. I just think it's a little overdone here. Ahead of crude inventories, if you're not holding something, it's probably not the best idea to get involved in this right now. Okay, so just keep that in mind. I just want to see what this looks like, guys. Bear with me one sec. Okay, that would give us target right at the 134 handle, basically on a pullback. If this is just basic channel resistance, break through, check as support, move off, you're still looking at a 134 clip. Questions on dollar CAD? Look, guys, at the end of the day, this thing has made a full round trip of the monthly opening range. If we clear the highs, if we clear 34, 68, sayonara. It's done deal. You're basically looking for 35.26. You're looking for 35.60 on a run to the upside to the high day close from last year. There's no point in trying to fight this if it clears the monthly opening range highs. But that being said, you are coming into the range highs. Something to take a look at. Dialed in for hitting this pair for the community, especially me. Haha, says Kelly. Cheers, Kelly. Yeah, I'm looking for the exhaustion. Yeah, I'm thinking you're going to get that last stretch higher. If it does, look for that exhaustion to early U.S. trade. I think the probable best play on this one, I might have jumped the gun, is to see the reaction on crude inventories, especially if the build is supposed to be stronger than expected, or if it comes out rather. Well, let me just show you the data. Here's what we're expecting, right? We're expecting a drawdown of about 14,000 barrels. So you saw the drawdown we got last week. If you get a smaller than expected drawdown or even, a build, look for that reaction to possibly shake this pair out. Clear out the weak hands, maybe that one last stab into 34.50, 34.68. But it's been a phenomenal rally, right? It's pretty crazy for 3 days. Gary wants to look at dollar yen. You know what? It's not even on the list, but I'll add it. Let me throw it on there. He says, I'm suffering exhaustion trading dollar yen. Yeah, I don't blame you, brother. It takes patience and a firm hand, I'll tell you that much. We'll take a look at dollar yen. Yeah, I still like the long side, Gary. It's not, it hasn't changed. It's just, it's a slow burner. We'll take a look. Let's get through this first. Okay, so dollar CAD, that was number 3. Kiwi, sterling Kiwi from me last night, that's number 4. I just wanted to highlight this real quick because it's coming into a very interesting area as well. It's a pair we haven't looked at in a couple of months. Here's what sterling Ki looked like last night. On the daily chart, I really just wanted to highlight the September high, which came in directly with the 50 line of the current ascending median line formation. This is off the lows that we made in November of last year and February, not the January low. Okay, gives us a little bit better symmetry, a little bit better trend line touches if you take it off this low. And you can see that the 50 line is now being tested as resistance right alongside that September swing high. Okay, just above that, and why I wanted to highlight this, and not really ready to get too aggressive on it just yet. The Kiwi CAD trade we'll go over in just a moment is something a little bit more appealing to me, but for this, I'm looking for some near-term exhaustion at this region or this region just for a pullback. Inevitably, I love an explosion here to the upside. The last time we talked about sterling Ki, and I always try to keep the previous update, guys, even if it's 3 months out, just to give you an idea of where we've been following this from. The last time we talked about sterling Ki was right here in late March, and in that point, it was coming into this key region, and we were talking about essentially this 178 handle being like, look, this is the potential. In fact, I think I even said that. Just wanted to highlight the breakout potential of sterling Kiwi. A move surpassing 78 is really going to shift things. Why? Well, that was the 2017 open. At that point, when we were talking about it in late March, you had the 200-day moving average converging right there. And it was also the opening range highs for the year. So there was a million reasons of why this level is absolutely paramount. And we were talking about, we could get a few false starts here, but I'd be looking for more definitive reaction. We would need a topside break to validate the breakout. That's exactly what happened. You got a couple of days, a couple of weeks of back and forth. Once we opened up the month, it was rock solid support. It's been that. Into the start of the week, it was support, converged on the lower parallel. Obviously, Theresa May and the British vote changed things or gave us the start we needed, but from a technical basis, we were already constructive above 78. So here's the breakout, now approaching the first area of initial resistance. Again, those September highs, 183.50, 183.48. The median line here could offer a near-term pause. Momentum is at 70. So from a trading standpoint, I'm not really doing anything here. I'm not looking to get long into resistance. That's stupid. At the same point, playing the short on this is going to be kind of tricky. I'd rather wait for the pullback to get long, banking on the break here to get into this trend line. It's not too far off, but that trend line is a little bit more critical because it's a basic trend line support extending off the highs from 2015, specifically the September highs of 2015. Okay, this slope, it hasn't been the most definitive slope, but it's offered some nice pivots, okay? If we take this same slope and extend it off the lows that we made back here in June, you could see that it caught the highs right into the close of the year. Into the start of this year was a little messy, but that same slope has offered some pretty nice touches as well, specifically the 2016 lows. So long story short, that converges just higher, like at 85.70. And then above that, you're looking at 87.37. It's a basic 236 of the entire drop off the 2015 high. So the levels are pretty clear. Initial resistance being tested now in sterling key. So what does it look like on the near term? Well, here is a 240-minute chart. Okay, nice spikes. Okay, so you're looking like you're getting initial resistance right now. Drill it down to the 120. You're getting some nice divergence on that last high. Okay, it's an overbought territory divergence, so it's not a very strong signal, but it's there nonetheless. Drill it down even deeper into the 60, and you're seeing that that trigger break is already starting to materialize. Outside reversal candle on an hourly basis at the highs is the first signs that I'd start to look for near-term exhaustion. So long and short of it is, I'm looking lower for now. The immediate focus, if you're super nimble on the scalp side, yeah, you can partake in this pullback here. Initial targets would just be a retracement of the weekly range. So it'd be just something like this. Okay, so that's pretty tight. 82.12, 81.40 would be a basic 38.2. That's where I'd be looking to wrap up any other short exposure that you have. But the long and short of it is you're looking for entries on this pullback. Inevitably, to 80.80 touch, if we get down here, would be really nice. Last week's swing highs, 50% retracement of this week's high for a rally into that key trendline resistance just higher. Questions on sterling key? Like I said yesterday in the report, from a positioning standpoint, I also kind of do like where Kiwi and Cable are here. I think Cable's a little overdone. You could see some exhaustion in Cable. Kiwi still has a little bit more upside. That would give us the pullback we need here to be able to initiate a little bit better of a long position. On the immediate focus heading into the U.S. trade session in just a few minutes, I think the risk is lower, sub 83.50. Questions on sterling Kiwi? I know it's a little bit odd of a pair, and so is Kiwi CAD, which is what we'll go over in a moment. But I can't control it. Where the setups are, that's where I'm going to point you guys. Doesn't matter what the asset is. Could be seashells for all I care. Here's Kiwi dollar, number 5. So Kiwi, you do get CPI numbers later this afternoon after the close of U.S. trade. Here's what the Kiwi dollar looks like. Look, it's setting up a pretty nice weekly opening range right above the monthly open. Let me take this into a 240-minute and just show you what the daily chart looks like. We talked about, well, let me just stick with the intraday on this one. Here's what the chart looked like last night. We talked about the fact that this thing had made a break of this trendline resistance. If you guys remember last week, it made a big old reversal here right off the lows. This was an 88.6 retracement just ahead of trendline support through the weekly open, right? That shifted the focus to the upside late last week. The rally is now just setting up right above the monthly open, which is right here at the 70 handle, with critical resistance up at 70.75, 70.90. How do I say this? We were talking about it yesterday, right? The fact that it was still marking some divergence into these highs. We're still marking a new divergent signal now with the new high that we made. And while I still think the risk is for a rally into that, I do want to get a short position off 70.80, 70.75 if we were to get a rally into that region. And that's kind of the setback that I'd be looking for on sterling Kiwi, for a move lower in sterling Kiwi, maybe some sterling exhaustion to exacerbate that, and then to get long there. Same thing here. If we get it rallying to this region, very interesting for me on Kiwi dollar. I'd have to reassess whether the longer term position for me would be a move all the way down to the parallel or a continuation of this broader median line formation, but the focus right now is on this range for me. Okay, and keep in mind also on the daily chart, If you look at that region that we've highlighted at 70, 75, 70, 90, you also have the 100-day moving average right here at 70, 78. You also have the former swing highs from late last month right here at 70, 86. Okay, and then this is the 618 line, oh, the 75% line. We talked about that yesterday, of the median line formation we've been following. So certainly everything's sort of mapping out pretty well for a tag of 70, 80, 70, 75 before reversal. But at the end of the day, the market's going to do what it wants to do. You're showing divergence into the highs. You have a clear-cut weekly opening range. A break below 69.90, okay? That's sort of where the gap open for the week is, would certainly, in my mind, shift things lower again. And if you don't want to play it by way or virtue of the dollar, you know, the sterling is the way, in my humble opinion. I'm looking to play Kiwi weakness if we do get that rally towards 70.90. Any questions on Kiwi dollar? Again, CPI number is later this afternoon. 1845, okay, in New York. This is 545. Okay. Moving right along. Next up on tap, that was Kiwi dollar, number 5. Number 6, an interesting pair as well. You don't hear talked about too often, but Kiwi CAD. Sticking right along with the Kiwi crosses that we've been so focused on. Again, a trade I just really wanted to highlight that is at a critical juncture in my humble opinion, and that is right here, 99.43 into 94.22. We talked about this trade, if you guys remember, a couple of months back at length, and it was all about the pivot on this region. Certainly back last year when we were talking about it, it was the 2016 Open, so it held a little bit more technical significance than it does now. Obviously, it's a new year. We have a new yearly Open, but the new yearly Open is not too far off. Here's what the, oops, I'm lying. The yearly Open is right down here. But in any event, we're not too far off from last year's Open again, and we're testing it as resistance. You have the 200-day moving average here. You have slope resistance here on the near term, okay? If we go into this chart, if you take a sliding parallel, or if you take basic trendline resistance, excuse me, aside from the slope that we've been following, just off the highs, you can see that that's being compromised or tested right now as well. Again, from a trading standpoint, I'm just looking for near-term exhaustion. The same respect, if we were to break this, okay, especially on a close basis, the pullback would certainly be something I'd be interested in initiating some new long exposure, trying to play the breakout higher. But all things held constant, I'm actually looking for near-term exposure or near-term exhaustion right here. As a disclaimer, again, I'm actually holding a short on this position as well. So we'll see if we can't fade that on a little bit of a pullback here. Here's what the 120 looks like. Okay, back below 70 was the move. Here's what the 60 looks like. And here's what our favorite 30-minute chart looks like. So I'm not going to lie, I don't really like the initial reaction just because if this was going to be a more firm hold of resistance, I would have wanted to see something like this. But we'll have to see what the U.S. Open looks like. It's pretty tight below that resistance. Again, it's a nice key region to trade against. If it plows through, 94.70 is the first initial target, and then I don't even know what's after that. I mean, you'd have to really see a stretch higher to get into the 764. That takes you as high as 95.40. But all things held constant, I'm looking for some exhaustion right here in Kiwi CAD. Again, be mindful. If you're not holding any positions on this yet, you have that crude inventories print at 10:30 might lighten things up for the CAD crosses. Any questions on Kiwi CAD? That is number 6. All right, number 7, Aussie dollar. Here is what Aussie looked like the previous session. This is from the 17th. And we were talking about the fact that Aussie took out all our topside targets, okay? It took out the last one to the 50% retracement. That was 76.11. Basically, if you guys remember on this trade yesterday, 76.11 key resistance, near-term support at the weekly open, 75.78. Once that broke, we came right here into 73.79. I was holding long off that yesterday, remember? Peeled off half of it after the webinar. I got stopped out break even on the rest of it. So no harm, no foul, but we did get that initial pop higher. We saw the initial opening range highs for Asia give us some resistance. Again, on the secondary attempt here, I peeled off half the trade, and then it broke even on the decline here. The breakdown keeps the focus lower. Okay, I'm not trying to fight this any longer, even on a rebound play. What am I doing? 240. Let me show you why. So here's your weekly open. Okay, you rally into resistance, you break back below the weekly open. This was the support barrier. That was the pivot we were talking about last week. If this was a break of resistance of this channel, we should have held here as support and moved higher, which is why I was holding that long position. Now that we've sunk back below 73.80, 75.40, not really looking to mess with this. What can I say? The thing that would turn me constructive again would be a break back above yesterday's high. So we'd need to see a move surpassing 75.60. That would put me constructive again. Otherwise, I think this thing's at risk still well below 73.70. I'm sorry, 75.37. Here's what the intraday chart looks like. And that would bring your targets to here. There we go. There's updated levels here for you on Aussie dollar. Here's the 120. Any questions on Aussie? You're quiet on data till next week. You do get CPI numbers on the 25th. That's probably going to be the bigger player. But for this, keep watching the dollar right now. Again, from a trading standpoint, put a gun to my head. I kind of think you get a little rebound here, break down into the lows, but this is still the region I'd be trading against on either side. So a breakout, I trade longs against that. On a rally into that, I'd be trading shorts against that same region. 75.42, 75.37 in Aussie. All right. Moving right along, that is Aussie dollar number 7, losing a little bit of focus, falling out of love with it, as it were, but something we'll continue to monitor as we get deeper into the week here. Levels remain unchanged. Sterling Oz. Here's what Sterling Oz looks like. A little bit better of a trade in my humble opinion as well, just because of the implications of where the daily chart's coming into. Here's what it looked like earlier in the week. Okay, here's the daily chart. We were talking about key resistance at 167.20 into 166.88. Huge level of importance. We went over this in the webinar yesterday. 618 retracement, 200-day moving average, former swing lows from back last year in August, all lined up in this region right alongside the objective monthly opening range high. Obviously, that was a definitive break on Theresa May's news. Targets at 168.45 and 169 have been taken out. That's now key support, okay, from the near term prospect. Top side, I still think there's more to go, but looks like there could get some immediate near-term exhaustion. So again, I can't, advocate for any type of long positioning right here at the highs. But I can tell you that you're testing, or you're coming into, first of all, the yearly open. I don't know why my yearly open markers are off on TradingView here, but the yearly open comes in right here, and that is also the yearly opening range high. So let me actually just highlight that, okay? It's 170, 120, 171.19. So put that on this chart here too. So long story short, look for some possible near-term exhaustion here on the pullback. How deep the pullback gets, I think, is also going to be gauged by, obviously you're going to want to watch what Aussie performance is doing, but as all the sterling crosses sort of stretch into this really extreme high, the washout's going to be interesting to see how deep it gets. Levels of interest for me are 69.50. I want to stay constructive above 69. Like I said, this is still key support now with a stretch higher, really needing to get through 71.20 to validate it. And then you're looking at 72.57. It's a big range scalp. So you have plenty of room if you do see a topside break here. But on this stretch, this is the first area. Look for some possible near-term exhaustion. Here's a 240 minute. Okay, so at this point, okay, here's what we look like last week, or excuse me, 2 days ago. Boom, boom, boom. 69 is what we broke about. That's now near-term support. So let's shift these targets up. We're going to go ahead and take our bullish invalidation where we were earlier in the week. This was where we wanted to stay constructive above. That's null. We're going to move that to here, 169. That's done. Topside targets, extreme 72.57. That's going to be critical. Okay, so here are sort of the new amended targets. 70.40. Yeah, I'd leave that there. It's been a decent pivot. Okay, so stick with these levels, guys, for Sterling Aussie. Still pretty clean. No change. Okay. On Aussie, you wouldn't short here, says Vlad? No. I can't say I would, Vlad. Tell me what you're looking at that's making you want to do that. I mean, I have this coming off support. I have this just breaking back from oversold conditions. If anything, like I said, 70.37, 75.37, 75.42 would be where I'd be looking to look for some exhaustion, some short entries. But if you take a short here, you guys, we always have to see what the risk to reward is, right? What is the base case scenario? So I can see what you're talking about. If you take a short here, because you're probably looking at a stop against that swing high, and that gives you a really tight stop, right, Vlad, which is always sexy. But is it going to move right back into the lows? Momentum kind of just rebounded from a pretty big region, just came from overbought or oversold territory. Oh, we're already at the 60. Let me see it. Yeah, I mean, it's too tight. It's too tight in my humble opinion. I'm always looking to initiate the position, Vlad, versus a key level I've been watching. So right now, you're not there, right? So I'd want to either be here or I'd either want to be against the low to try to get along if I want to play the rebound. But from even the near-term prospect, it's all about where you are in price. And right now, I'm right slap in the middle of the daily range, literally, from the ascent off the lows in Europe. So from my standpoint, I kind of want to see it. You know, I kind of want to see it either closer to resistance or closer to support. A trigger in and of itself, mid-range of the market day is kind of you're still nowhere land. Does that make sense? He said, got the point. Thanks. Cool. But yeah, always feel free to throw out those questions, guys. If you see something eminent, I'll just give you my interpretation. I got no problem with that. Okay, sterling dollar is next up on tap. Obviously, everyone's looking at this trade on the back of yesterday. Quick update on what we're doing here. Here's what the daily chart looks like for sterling dollar. So also a trade that we had highlighted right before Theresa May's announcement. Okay, here's what it looked like earlier. This is what we talked about yesterday in the webinar. The breakout of this region, really the main key focus was 127. 127 got taken out in a heartbeat. Now that's key support. We've even made it through the median line. So 127.98, 128 is what we're sitting at. 128, or is what we're now using as support. We're sitting at 128.40. But watch this region. That's this right here. Okay. This also completes, interestingly enough, or sits on the 100% extension of the advance off the yearly low, which is something I added on yesterday. So I'm interested to see if this, pocket of 127.98, 128.28 offers any support today on a close basis. Here's what the intraday chart looks like. It's getting a little ugly. I don't have any exposure on this, nor am I looking to put anything new on it, to be honest with you. Not now, and not right here. But, whoop. Here's what the intraday chart looks like. There were the top side targets, 128.27. That's what we're sitting at right now. So we can clean this up. Near-term support, 127.98. Like I said, it's the July lows. That was just a breakout. Don't need that. That target's done. Don't want to stress that. Keep those July lows. Top side is July low day close. Gives you 29.26. Trendline resistance. Okay. So here's another cool thing. You know, I don't really have any targets above 129.26 per se until 131.27. 131.17. Excuse me, guys. I feel dyslexic today. Which is a basic 38.2, longer term of the whole Brexit debacle. But listen, if you take a parallel of the same slope we've been working with, okay, boom. Remember that was highlighting further resistance? Take that same parallel. Looks like it caught those two highs pretty well. Gives you an intermittent target above the July low day close somewhere around like 130. So that's the first initial target I'd be looking for in a breakout. Initially right now, although it's an overbought condition, I can't advocate chasing the long side. If you're not already long, if you're holding longs, a stop below 127 makes sense. Or even 127.90 if you have a decent entry. Okay, even if it gets into that region, I'm fine with it. But to initiate a new scalp from here or a new intraday or intra-week position, I'd need to get a setback a lot lower, hopefully near 127 if you can. Or if you break the highs, look for the pullback again into the July low day close here at 129.20, looking to see if you can get that stretch near 130, 131. But a breakout's a breakout. And like I said, if we keep that parallel, keep these parallels in play, you know, even a pullback into this region would still keep us constructive. And that's the same region on the daily chart as right here. So let's do this. Questions on British pound? Okay, keep in mind you have sterling data, the retail sales print on Friday. Other than that, you're clear. Okay, moving right along. We are running late on time here, so let me pick up the pace. Number 8, sterling dollar was number 9. Okay, into your questions now. First things first, just want to go over the commodity block. Silver, I don't know if Sarub, if you're in the room. There you are, buddy. We've been following silver for you for a while now, and here's what the silver trade looks like. I just wanted to highlight that it broke that level of support we talked about yesterday as expected. And the move is coming right into some areas of interesting support. So here's what the daily chart looked like. We were talking about 1838, 1833, I think it was yesterday. As a support structure, you had the median line off the lows right in that region. You had a huge pivot, the 50% retracement from the decline, the 100% extension of the ascent. We were talking about that level for weeks and weeks and weeks. Long story short, it did break yesterday. And we did come back, check it as resistance even. So I'm still thinking you get that pullback towards the May high 18, towards that confluence support down at 1790. I still think that's a scenario that you want to consider. But certainly on the immediate approach here heading into the U.S. Open, I still think you're at risk below 1837. There's really not, it's resistance. It's resistance. Keep in mind a couple of things. This is the monthly open, so you're now trading below the monthly open. And this is also the August lows. Let me take you back to the daily chart real quick. There's the August lows from last year. So it's a big region, and certainly this is the second failure to do it. You did it on divergence, okay? This is also the yearly opening range high. So this is also constitutes a failure at the yearly opening range high. And you had an outside day reversal at the highs of the year. Exhaustion all the way home. Okay, so near term, yeah, the pullback, you're probably going to see some chop, see another rally back towards 1836, but as long as we settle and hold below that, I do think you want to respect the downside here in silver. Questions on silver? Crude, number 11. Again, I don't like crude prices per se, but heading into the crude inventories, I did just want to highlight the key levels that we highlighted yesterday or that we talked about briefly. Just the fact that this could be trading within the confines of this descending bull flag formation. If it is, still highlights 52.75 near-term resistance, basic 38.2 retracement, last week's low, channel resistance, all would need to be compromised if we break through that. So, watch a break of this range heading into the U.S. Trade 7. Again, 10:30 Eastern is when you get the release of those crude inventory numbers. And certainly, break of that near-term range should give us a little bit more of a directional bias on the near term. Again, put a gun to my head. I think you rebound in crude prices first, and then you look inevitably for the pullback into 51.60, 51.40 again. But yeah, this break early in the month changed things for me. So I'm kind of still neutral in my head on broader crude prices. Any specific questions on crude? I know, Vlad, you're looking at that. It's my least conviction trade of the commodities at this point. Still think silver is way better positioned. You wanted to look at sugar. Okay, so obviously you had me looking at this earlier in the year because I do have some analysis on it, which is interesting. But let's take a look at where we stand now. Okay, looks like that's null. Done. It's your monthly open. Ooh, that's interesting. Huh. Okay. So here's the deal with, and again, I'm just taking a snapshot. I'm just going right off this, Pete. This is the first time I looked at this probably this year. Look, so the levels we had mapped out actually pan out pretty well. I still think 1523, 1547 is huge. These are always going to be my favorite fib confluence regions, 100 off the high, 618 off the low, or vice versa. And that converges on basic slope support. This is a parallel off the highs, but it also has 3-point tag or 2-point tag, whatever you want to call it, already in and of itself. So it converges on the median line on that region all down here. The focus right now, okay, is going to be on 1719, 1607, the monthly opening range, which is preserved right below that 50 line. So this is actually a really clean setup. You want to look for a break of that range. Ultimately, the favored break would be for a final dip into that key support zone before making and staging a larger set recovery. But at the end of the day, a 1719 break to the upside would shift the focus back towards the upper parallel. So right now, range trade. If you're looking for intraday positioning, the range is the way to go. For me, if I have any shorts near the weekly or monthly opening range highs, I actually would be rather holding on to those, chipping off a little bit on the way down, leaving my stops at break even, hoping to get that break for that last dump into 1521, 1547. But Big region, big region. So Pete, I hope that, or I think this is for Vlad. I hope that helps, Vlad. Does that make sense on sugar? Interesting chart. Don't have anything intraday for you per se, but the monthly opening range taking set right below that 50 lines, pretty nice and clean here. So keep those levels in mind. If you get the topside break, the unfavored scenario, tack on a retracement from the decline off the February highs here to see where you end up. This is also going to be if you take this retracement, by the way, this also ends up being a retracement of the entire 2017 range, which is something I always want to pay attention to as well. And it highlights 1733, even more. Okay, thanks a lot. Very interesting for me, rather midterm there. Yeah, it's something to take a look at, but again, you're sitting right in the middle of the weekly range, so inherently right now, don't necessarily think there's anything pressing, but the setups are clean, the levels are super clean. Have we reviewed gold? Entered the session a few minutes back. Hey, Sarub, no, we haven't. Thanks for silver. You got silver? Great. Yeah, so we haven't covered gold. That's next. Here's what gold looks like, and then we'll look at euro dollar and dollar yen. I have some questions on from you guys as well. So crude, what are we talking about right now? 12 was sugar. 13 is going to be gold. And 15 is okay. So here's gold. 1284, still in no man's land, okay? We are looking for confirmation of the breakout, of whether the breakout is legit or not. I know there are some people also, you'll be looking at this trend line, which basically has us still within the confines of it on a closed basis, whatever you want to call this, guys. At the end of the day, again, I'm going to bring up that weekly chart again. I know you guys are probably sick of seeing this, but here it is nonetheless. You know, at the end of the day, I don't know what to do with that. I don't know what to do with that. Remember what we had talked about earlier in the week? You know, 6 weeks up has called the last major highs in gold, both in the 2014 rally and in the 2016 rally. Last week was 5 weeks high. Do we dribble here? Put in some sort of pathetic doji or small candle, small-bodied candle to get the 6th week before we collapse? I don't know. That would require a close above 1290. So for me, you know, the weekly range is sort of just kind of playing, is just gonna play people out. I think you sit lateral sideways here, fake everyone thinking this is the biggest breakout, 1325's on tap, then get the slam down, or you get one last tag into 1303, and then some sort of correction off that level. I don't know. At the end of the day, if the weekly close happens above 1290, I think this thing is going 1325, 1336 before we turn. But for all intents and purposes, you know, despite the fact that you're even seeing the DXY, right, with that collapse yesterday, and gold really unable to make any type of topside progress, I pay attention to those kinds of things. It closed higher on the day, but nowhere near the magnitude. So I think it's getting a little tired. Momentum is showing divergence on the daily chart. We already talked about that. Whenever you're looking to assess that, bring into a line chart, give you a little bit better of a picture. Here's the higher high and close. Here's the lower high in the oscillator. So I'm still cautious on gold. I don't want to say I'm bearish by any means. 1278 break to the downside would need to make me bearish. And that, my friends, would be a break of the objective weekly opening range. So in and of itself, a 1278 break would put me on a near-term bearish trajectory. But right now, I think you got to respect this near-term range, respect support at 1278, look for that downside break to give you the validation. Even from basic trend line here, symmetry, really nice, resistance would be a nice kickback off that region. But it's a tricky spot for gold, but I do think it will be the tell alongside dollar yen. And this is something that obviously a lot of people are getting frustrated with as well. I hear you. Who was saying that earlier? Gary? I hear you with your frustration on dollar yen. Look, it's always going to be the abomination trade to me, so you can never complain enough about despair. in my eyes. Here's the thing. The levels remain unchanged. You have a very clean weekly opening range taking shape here. You know, swing trades, we got out of half the position, so we'll see if we can't get any progress to the upside here. The coiling effect has me wanting to look higher. You know what I mean? But these can be terminal or continuation. I've seen them happen both ways. We talked about 108.43, 108.77 yesterday being that key region, right? And it's just basically what we're straddling here into the weekly open, okay? Levels remain unchanged, but you'd need to clear Friday's high to get any progress on this trade. And it's all the same trade. You're looking at the same trade. Dollar, yen, gold, S&P, a whole risk asset. It's kind of in a muddle right now, looking for some direction. Here's what the SPX looks like on the intraday charts. You know, that level that we opened the week, we talked about that resistance kind of changing things if we break above that. We broke above that yesterday, came back, tested as support. Here we go. Same type of deal. You know, this thing could come right back into the monthly open before turning around, but yeah, I'd still be looking for that favored move lower towards 23.15. So where does that put me on, you know, dollar, yen, and gold? So we'll be tracking these more closely. I think you have a better deal on the dollar crosses that we covered earlier as far as like the CAD, sterling, key. We went over euro, we went over dollar, yen, and that was 13. Any other questions, guys, before I wrap things up here? I actually got through everything I wanted to today. And Kiwi CAD, where are we at? Kiwi CAD. Yep, still holding that resistance. Okay, so guys, I'm going to wrap it up here if there are no other questions. We will see you again tomorrow morning for the wrap-up of the week. Keep in mind, Jamie's going to be up on tap at 12 o'clock for the midweek strategy webinar. Event risk for the day, 10:30 Eastern, the release of crude inventories, 2 p.m. Eastern, the release of the Fed's beige book. On alert effects, does enabling Twitter work? Pooja, I don't think we're hooked up with them for Twitter just yet. It's actually something that's on the that the developers are working for. I'd love to get that integrated, but not yet. You'd have to set up the alerts right now. You can do SMS or you can do email. So we will see you at 12 o'clock, midweek strategy webinar, again tomorrow morning as well. Best of luck trading, guys, and we will see you then. Cheers.